Hey guys, you're looking at a chart of oil prices based off the OPEC meeting, the reaction to the OPEC meeting. They are going higher since last night. Well, if you're part of the paying member alert group, you would have gotten a message to short oil right here on the pump. You may think this is highly contradictory, but we believe this is a great opportunity to short oil. Now, the very fact that OPEC is lifting prices, it actually is a representation of their concern that recession all over the world is going to, in fact, take place rather soon. And there would be no reason for them to cut oil production further unless they were concerned about a worldwide recession here. Now, it started with Russia cutting their oil supply about a month ago, and the initial reaction was the same. Initially, gold pumped. And guess where it pumped when Russia cut its oil supply? It actually pumped to the same level of $80. So this 80-81 level in oil is a very, very meaningful level, and it creates a highly shortable opportunity. So I'm going to increase the time frame on this chart, guys, to where it potentially capture that time frame where Russia cut its oil supply. So there it is. Okay, we can see it right here. It is this same level. See all these green candles? Okay, that was the time frame of that oil cut. So now they're announcing more oil cuts, other countries in OPEC, and we're at the same level. So you can't just focus on the current price action. Your goal as a trader is to figure out what will happen next. Well, what we know happened next last time in not so distant history is a further drop that escalated to a drop that we predicted all the way down to 64 bucks. So we're back to this level again, and here we go. Shorting oil again with 13 market moves. We did it yesterday, just when oil pumped to 81 bucks. So far the trade is not making huge money, but it is a profitable trade. And we're expecting over the next few days for things to unwind to the downside. Again, OPEC cutting oil production is their decision on what happens in the world next, and they're not expecting things to boom. They're expecting things to recess. They're expecting things to deteriorate. As a matter of fact, no one expected this oil cut or the magnitude of this oil cut. Therefore, we got a huge gap up, all right? But the question is, once the market goes for this initial reaction, okay, there's two outcomes that are possible as a result of a oil price collapse from this level of 80-81 back to the 64. We could be at 64 in oil, guys, in 2 weeks. So this is a beautiful opportunity to short oil at this level. But there's two outcomes of this, and that is the fact that, you know, we've been shorting S&P 500 this morning. Okay, we were short this morning. You would have gotten an alert. If you were a paying member or alerts group, you would have gotten a message right here to short it on the pump. I voiced my opinion over the weekend saying that, look, can the market go slightly further from Friday? Yes, but watch out for these levels. 41.30 and 41.80 was the other level. So we actually had a chance to run to 41.80 this morning, but we couldn't even climb there. So 41.57 is likely the top for this week, and we could see the market maybe play around with this 4100 level for a couple of days, ultimately resolving into a break lower. So the market is in fumes right here. The characteristic and the behavior of the market is such that every time we appear price action wise to be moving higher, there is less and less market participants on the bull side. And often we can be on fumes for a few days. At times we can be on fumes for a few weeks. But when the resolve to the downside begins, we can accept a substantial move lower. So that is a result of OPEC saying, hey, we'll cut the oil price. We don't think the economies worldwide are able to support the current price level in oil. Therefore, we need to do something, and we still want to collect money at the current prices around $70, $80 a barrel. If they didn't cut the oil price, if they didn't cut the oil supply, then guys, oil could have been in a serious trouble right now. We could have been below 60 bucks. But we're getting there. We're getting there slowly. So just stay on the right side of the trade. S&P is going to go lower. Oil is going to go lower. The only thing that will go higher, as you know, is going to be gold. And it's going to be Bitcoin. Guys, gold right here, back to that 2007 level. Very critical level. We've been here once, twice, 3, 4 times. And in many instances, I would be the one shorting this opportunity, guys. But fundamentally speaking, I mean, this chart will resolve in a huge upside move any moment of the day. It could be today. It could be tomorrow. It's going to take place in the very near term. We're looking at hours. We're not even looking at days. We're looking 24 to 96 hours, guys. We're not looking at weeks for this breakout in gold to take place. It is super close. So dare to make a move with some of these simple trades. Don't miss them. A week from now, you're going to be reviewing this video. You're going to be like, how did I not act on this message, guys? So schedule a call at 13marketmoves.com. Sign up today, guys. Don't miss some of these killer trades. If you still have no idea how do you use options to trade gold prices, okay? Click the button below this video somewhere. Go to 13 Market Moves. Get on a call here with a trading coach and learn how to do this today so you don't miss out these huge breakouts that I pointed on these multiple charts. But let's go ahead and glance at a couple of oil things since this video is really dedicated towards oil. Some of these things are going to be a result of what OPEC has made up their mind about over the weekend. But ultimately, let me show you how oil has already begun breaking, even though it appears to be so bullish right now. So in many instances, if we take a sample of various oil stocks, it'll give us an indication whether this gap up in oil prices is actually a bullish move or is it a bearish move. Well, clearly, if you would have taken the 13 Market Moves charts divergence course and pattern recognition, you know how bearish some of these black candle formations could be. When a black candle like this is formed, you could expect multiple days lower. Now, clearly, PXD, Pioneer Natural Resource, okay, we pointed multiple trading opportunities on the short side over the past few weeks. And yet again, what are we doing this morning, guys? You know, if you're trading with the 13 Market Moves coach, one of the simplest trades was to short PXD when it was pumping, when it was up huge. So we bought 2 15 strike puts on PXD today. And it's currently the trade is only up 150%, but it's got a ton of room to run. Especially these are very safe puts. They're 215 strikes. We're in the money by $3 already on them. Now, we were getting in when the stock was about 217, 218. So basically caught near the top of the move on Pioneer Natural Resources. The trade is based on the fact, just like I broke down the oil chart to you, oil is at the level where the short pays. It paid last time. When we shorted at that level, it's likely to pay this time. The probability is above 87% that oil will drop from here. It could go sideways for a little bit. But judging the reaction of how oil companies, prices of oil stocks are already behaving, they're setting up a top at key levels. Look, this black candle formation, it's not a coincidence. It shoots up right to the resistance level and it stops. Couple of cents just away from a perfect resistance line. We're likely to reverse, maybe see it back on the blue line for a little bit, which takes us to a 206, 207 level. But then from there, I think the situation is going to get ugly because, again, the world is responding right now, well, they're cutting oil supply, sure. But what is the root of the cut? You got to look at the context. It's the fact that they think the world is going to hell, and there's no way, unless they cut the oil supply, oil prices are going to be able to hold up at these current levels. So there it is in a nutshell. You got a top in Pioneer Natural Resources, which is a beautiful short. Now, this is not just Pioneer. You want to examine the entire sector. So let's take a look at Fang. And no, that's not Fang, the technology stocks. This is Fang. This is Diamond Energy. FANG is the ticker. Whoa, coincidence? I don't think so. Same type of black candle, indication of a top. Now, this is not a coincidence by no means that the same candle is formed on PXD chart and FANG chart. And it's also not a coincidence, even though this particular stock trades above the orange and the blue. But look at where this candle stops. 145, 146 level. It's exactly the same level where the prior three tops have been formed. So probability is it moves here to the downside. There's going to be just a matter of a few days when this gap up from 135 to today's high of 145 and 146, when this gap is going to be closed. So this is a very good level to come in and short these things. Well, what else? Well, the big heavyweight. Let's see what it's doing today. CVX. Guys, I'm just punching these stickers in. This is unplanned. I ain't preparing not for these videos, never. So I'm just punching in the stickers, having a discussion with you about this CVX. Is it coincidence that CVX has this black candle? Absolutely not. It is the entire oil sector saying, hold on, this pump in oil prices, it's a temporary bullish signal that is actually highly bearish. And if you were to examine the volume, why is the volume so low on what appears to be such a highly bullish sign for oil? Let's take a step further. EOG, that is another oil stock. Whoa, why does it have this same fucking candle? Guys, it's not a miracle. I'm not a fucking magician, okay? But there's behavioral characteristics in the market which is strongly represented across any oil stock. If you are trading any kind of oil stock, I promise you, if you type in the ticker, there is a 99% probability that you will have a black candle on your screen resembling this one. Okay, so, and guys, if you don't still know what the fuck is a black candle, how can you be trading without it? Because this represents all the institutional behavior and points out to where things are going next in 90% of plus instances. So don't trade another day without understanding what a black candle is. Now, you may be thinking, okay, well, these are all oil stocks. You know that some things in the energy sector, they are connected. And let's take a look at ENPH, okay? ENPH is alternative energy. So it recently had 3 black candles. The stock cannot find its way higher, even if it life depended on it, okay? This stock, I wouldn't be shocked, guys, if it goes to 80 bucks. Right now, it's at $210. Well, considering today's drop, it's down $7. So we're at 202 right now on ENPH, guys. This stock, the moment it breaks 182, guys, we could see this thing next time. You're looking at the chart, it could be at 149, 150. Guys, the move in this stock could be so brutal when everyone heads for the exit. It's been right around here between 190, 220 for a little bit of time, but it cannot find its way. It can't find its way higher. So the next move here in ENPH, it is a move lower. Do not miss it. Trade it with 13 market moves, guys. The energy sector is a highly profitable short this year, 2023. I don't give a shit what all these analysts are telling you. Probably, I don't know, CNBC, Bloomberg, they're going to be like, oh no, oil prices are heading back to $100. OPEC is cutting. None of them are going to say that this move in oil today to 81 is a highly profitable short. And that is exactly the reason why you should stick with 13 market moves, trade with 13 market moves. And this is exactly why you should be one of the guys that's going to make million plus trading with 13 market moves this year. Let's roll. I'll catch you guys in the next video. Short the fuck out of oil. Do it with 13 market moves. Let's roll.